Welcome to Markets Now. I'm Michelle Rook along with Tom Fitzgerald, Summit Commodity Brokerage, and we had a lower day on Monday in the livestock futures mixed in the grains. But initially, Tom, we did see some pressure in the morning because of those COVID concerns in China, some of the protests over the weekend. So then soybeans were really able to shake that off pretty easily. So what popped the soybean market back higher?
Yeah, I think that COVID mess over in China really had a greater effect on the equity markets and on the crude oil market overnight. But you saw the markets kind of come around to that. You're starting to hear about this OPEC in their meeting on December 4th, maybe trying to cut production, partially maybe in retaliation for the U.S. going to Venezuela to get more oil. So you've got that, and the market kind of worked through that, but then crude oil turned around early in the trade, and when it did, you started to see the bean oil start to come back, which is highly tied to crude oil prices. And then there's also a lot of discussion about dry weather in Argentina, and that creeps up into southern Brazil. Argentina is a major processor of soybeans, so they tend to sell meal rather than beans. So as a result, you saw meal start to come up, and so soybeans benefited really from strength in both the soybean oil and the meal. Um, corn was kind of stuck in no man's land today.
Yeah, and planting is behind for both corn and soybeans in Argentina, isn't it?
Yeah, their farmers are holding off, waiting to see if they get some moisture. It's not late yet, so I mean they can still plant and still get decent crops. And there's an expectation that in the middle of, well, starting now through the middle of December, they're going to see better rainfall. Maybe not enough to sort of replenish their subsoil, but enough to get the crop up and going and see what happens. Now, their farmers down there are anticipating the end of La Nina and the start of an El Nino, which tends to give them better rainfall and better crops. So, we're going to have to watch pretty closely here through the middle of December to see if that is in fact what starts to happen, and start to see if their planting progress picks up at a little quicker pace.
Soybean export inspections were good this morning, over 74 million bushels. We had some sales to unknown destinations. You said that was largely anticipated. Do you think, though, the window is closing here now where we're going to start seeing this slow down quite a bit or not?
Absolutely, it is. I think South American soybeans are offered at substantially under U.S. Gulf prices. So maybe the Chinese and some others are going to hedge their bet a little bit because of this dry weather in southern Brazil and northern Argentina. So maybe we'll get a little more than we thought we were going to get. But I think by the end of December, that Brazilian crop's coming on. It's nearly all planted. They've got good moisture in the vast majority of the country. Most people think we're going to get a 151 to 153 million ton crop, soybean crop out of there. So there's really no need to buy U.S. soybeans when they're that highly priced. So yeah, export inspections were good. Anticipated that they would be good today. But I think you're going to start to see that fall off as you head into the early part of the 2023.
You bet. So corn tried to rebound along with soybeans, but wheat kind of served as a boat anchor, and export inspections weren't that great this morning either, were they?
No, inspections weren't great, but you aren't going to have export inspections and loading out of corn if you don't sell any of it. So we need to get some sales made in order for that to happen. The wheat market sort of fell through support at $8 last week, and everybody sort of jumped on that again today. So you saw a lot of downward pressure on wheat, and like you said, it kept corn in limbo between strength in the ethanol market or excuse me, in the crude oil market, and then weakness in the wheat market. Now, wheat is down to levels down around 750 on the December contract, where you're starting to barely see it become competitive with corn as a feed. And we really can't. We don't. Our supplies of wheat aren't great enough in the U.S. that we can really see that happen. So I think you'll find fairly good support here once things stabilize.
Yeah, I know export inspections on wheat weren't very good either, but we've got wheat down at these low levels that you mentioned, and you've got the funds very short in Chicago, and they're not that long in Kansas City. Are you thinking we're getting close to a low? We're pretty oversold.
Yeah, we're very oversold. Part of the other thing that I guess I didn't mention that's impactful for both corn and wheat is the fact that we've seen a fair amount of grain flowing out of the Black Sea region. I think that for a while there was an anticipation that that wasn't going to happen, and it is. That agreement's been extended into March. I mean, who knows if that'll last, but that's the assumption we have to operate on right now. So that's part of the problem for both those grain markets that we're going to have to sort of contend with for a while.
So a lot of red in the meat sector today. Cattle market, was that just, are the global demand concerns overweighing the higher prices that we saw for cash trade last week, that $3 bump, or what?
I think, as you know, the cattle market's been particularly close to the equity markets. We've really followed them around, and we saw a lot of weakness in the equity markets today.
Right.
There's just a lot of concern. We've got a lot of reports, economic reports coming out this week, inflation reports, jobs reports, and so everybody's a little uncomfortable about what that's going to say this week. I think that negativity spilled into the cattle market, feeder market as well. Normally, feeders kind of cue off the corn market, and you would have thought with that being steady, it would have supported feeders, but they sort of followed the fat market today. And then you saw a lot of negativity in the hogs, and that probably didn't help the whole meat complex either.
Yeah, was that a demand play too over there, especially with China COVID, or what?
Yeah, I think it absolutely was. There's a lot of concern about what the impact is of the COVID situation. What the impact is of all of these protests. How's the government going to react to that? What the impact that could have on China, and we're all tied pretty closely to China in a lot of ways. So is there going to be global spillover onto the rest of us from the problems over there?
All right. Well, I appreciate your analysis as always. Tom Fitzgerald with Summit Commodity Brokerage on Markets Now.